Hello and good day. For today, our topic is credit policies. In this video, I'm going to discuss the introduction of credit policies and the general policies on credit. Since our topic for today is credit policies, it is very important for you to know first the meaning of policies. In business, policies are general statements used as guides for the members of an organization as they perform their jobs. In other words, policies provide guidelines on the tasks of every member of an organization. That's why it is really necessary for every organization to set their own policies. Without these policies, every member of an organization may not be guided properly. Because they don't have guidelines to follow, they may not be able to perform their jobs efficiently and effectively. Policies are designed or set at various levels. Of course, merong top management level, merong middle management level, at merong bottom management level. The policies at the top management level are strategic. The policies at the middle management level are tactical. And the policies at the bottom management level are operational. Policies reflect the objectives and management philosophy of the organization. That's why when organizations set their own policies, they must assure that their policies are in line with their objectives and management philosophy. Let's now proceed to credit policies. Credit policies are proposed by the credit department, then later approved by the board of directors, who may delegate this function to a credit committee or the company president. Ang credit policies, ina-approve yan ng board of directors. Pero take note, hindi porket inaprubahan na siya ng board of directors ay wala ng changes. Actually, yung credit policies, nire-revise yan from time to time, depending on the need of the management and the circumstances. Sometimes, in setting credit policies, kinoconsider rin nila yung inputs ng branches at district officers. Different enterprises have different sets of credit policies. Merong mga businesses na hindi nagpapautang. They have a policy of no credit. Sasabihin nila, your credit is good but we need cash. Meron ding mga businesses na nag-o-offer ng credit. They are granting credit to their customers or clients. Ang maganda kasi kapag nag-o-offer ka ng credit ay tataas ang sales mo. Yan ang advantage ng pag-grant ng credit sa customers or clients. Tataas ang sales mo. Pero ang disadvantage ng pagbigay ng credit sa customers or clients ay yung risk of collection. Maaaring hindi mo na makollect yung credit. Recall that no business is immune to bad debts. Banks are heavily regulated by the Bangko Sentral. Since banks are heavily regulated by the Bangko Sentral ng Pilipinas, most of their credit policies have to conform with the Bangko Sentral regulations. The question is it really needed to put into writing the credit policies of a business? The decision to produce a written policy manual would depend on, first, financial resources of the company, second, philosophy of the management, third, organizational size and structure, fourth, complexity of credit transactions, and fifth, approval limits. Of course, sa malalaking kumpanya, dun sa mga companies na merong iba't ibang branches, at sa mga businesses na merong large volume of credit transactions, kailangan talaga nilang magkaroon ng written policy manual. Pero sa mga businesses na maliliit, gaya ng sole proprietorship, hindi na kailangan. Considering their financial resources, their size, and their structure, kung meron silang credit transactions with their customers, pwedeng verbal na lang. Hindi na nila kailangan ng written policy manual. Most mid-sized companies start out by sending a 5-page guidelines to their branches or operating units. Every other month, new policies will be disseminated. The branch manager puts all this in a folder marked credit policies. As the organization grows, it may consider the production of a credit policy manual. Next, general policies on credit. Some of the areas where general policies have to be designed are, first, approval authority, second, credit limits, third, loan to market value ratios, fourth, past due limits, fifth, territorial limits, sixth, single proprietorship versus corporation, seventh, other side agreements imposed by lender, and eighth, separation of credit from marketing operations. I will discuss the areas one by one. Let's start with approval authority. Ang ibig sabihin nito, sino ba yung mag-a-approve or saan ba gagawin yung approval? The authority to approve could be geographical, meaning to say, saan ba gagawin yung approval? Sa head office ba, sa regional office, or sa branch office? Let's say the amount of loan or credit is over 500,000 pesos. That is to be approved at head office. If the amount of loan or credit is from 200,000 pesos to 499,999 pesos, that is to be approved at regional office. If the amount of loan or credit is 50,000 pesos to 199,999 pesos, that is to be approved at the branch or district office. The approval authority could also be based on rank or title. Let's say the amount of loan or credit is over 500,000 pesos. If the amount of loan or credit is over 500,000 pesos, that is to be approved by the President. If the amount of loan or credit is 200,000 pesos to 499,999 pesos, that is to be approved by the Vice President. And if the amount of loan or credit is 50,000 pesos to 199,999 pesos, that is to be approved by the loan officer. These simple delineations directly pinpoint responsibility and accountability. Take note that the approval authority varies from one business to another. This may be applicable to some businesses, but it doesn't mean that this is applicable to other businesses. The approval authority still depends on the policies of the company. Sometimes, the decision as to who will approve a credit application will require practical and common sense considerations. Let's say a branch of an appliance company in a mid-sized city where there are aggressive competitors will have no installment customers if approval for installment applications must first be obtained from the regional office. Ang ibig sabihin nito, dapat yung approval ay sa branch na mismo gagawin. Hindi na kailangang iakyat pa sa regional office because that would be a time-consuming process. Ang gusto ng mga appliance customers ay yung mga appliance sellers na makakapagbigay sa kanila ng quick response. The same is true in a pawn shop. The pawn shop in charge must appraise the jewelry and give the loan on the spot. Otherwise, the potential customer will just move to the next pawn shop, half a block away. Of course, sa dinami-dami ba naman ng pawn shop businesses, kung hindi maibibigay yung loan on the spot sa customer, pupunta siya sa ibang pawn shops na kung saan makakapagbigay sa kanya ng loan on the spot. Next, credit limit. Ano bang ibig sabihin ng credit limit? Credit limit is the maximum amount of credit that could be granted to one borrower. Ano ba yung purpose ng credit limit? Ano ba yung purpose kung bakit nagsiset ng credit limit ang businesses? The purpose of a credit limit is to protect the lender from a large transaction that could cause its financial collapse. To illustrate, let's say Company R has 10 customers and the credit limit is 1 million pesos per customer. If 2 customers will default and the 2 accounts will turn out to be bad debts, this company will have serious financial difficulties. Ang total receivables kasi ni Company R ay 10 million pesos. 2 million pesos ang hindi nabayaran. So that is equal to 20%. 20% ng total receivables ni Company R ang hindi nabayaran. That would cause cash flow problems. What if ni-reduce ni Company R ang credit limit to 500,000 pesos per customer? That would take 4 customers to result in a 2 million pesos loss on bad debts. 4 customers times 500,000 pesos per customer, that is equal to 2 million pesos. That's why it is very important na hindi masyadong malaki yung credit limit ng isang customer. In determining a company's credit limits, there are factors that may be used. The factors that may be used in determining a company's credit limits are, first, the average total purchase amount per customer per order. Second, the nature of the product being sold. Third, the geographic distance between the branch and the approving authority. Fourth, the nature of the company's competitors. And fifth, the credit quality of its customers. Next, loan-to-market value ratios. In secured loans, loan-to-market value ratio represents the maximum loan that could be granted to a borrower based on the property's market value. Ang secured loans, ito yung loans na kung saan merong collateral security. Let's say for example, ang market value ng property ay 100,000 pesos. At ang policy ng business on loan to market value ay 60%. So that means ang maximum loan na pwedeng ibigay sa borrower ay 60,000 pesos. 100,000 pesos times 60%, that is equal to 60,000 pesos. Ang loan to market value ratio dito ay 60%. 60,000 pesos divided by 100,000 pesos, that is equal to 60%. For brand new durables such as appliances and vehicles, the loan to market value ratio has already been established as the difference between the retail selling price and the down payment. Let's say the retail selling price is 20,000 pesos. And the policy of the business on down payment is 20%. 20,000 pesos times 20%, that is equal to 4,000 pesos. Meaning to say, kailangang mag-down ang customer ng 4,000 pesos. So, the amount to be financed is 16,000 pesos, which is 80% of the retail price. In this example, the loan to market value ratio has already been pre-established by the company at 80%. Meaning to say, ang loan to market value ratio ay 80%. Next, past due limits. Ano ba yung ibig sabihin ng past due? Di ba, merong due date para mabayaran ng customer ang kanyang utang. Kapag lumagpas na yon sa due date, that means yung account ng customer ay past due. The past due limit is imposed as a performance measurement tool of branches or of the credit and collection department. As much as possible, dapat walang past due accounts. It is the responsibility of the branches or the credit and collection department to collect the accounts on time. Kapag walang past due accounts yung branches or credit and collection department, that means maganda ang kanilang performance. And as a reward for their good performance, they are given incentives. And sometimes, this could be the basis for them to be promoted. Next, territorial limits. Areas where credit could be granted are clearly identified based on geographical limits. Some of the factors used in delineating these limits are, first, peace and order situation, particularly in provinces where insurgents are active. Second, availability of regular public transport facilities. Third, prevalence of crime. Fourth, travel time. And fifth, road conditions. Numbers 1, 3, and 4 are self-explanatory. Dun sa number 1, since maraming rebelde, credit could not be granted in those provinces. Dun sa number 3, since maraming crime, credit could not also be granted in that place or area. Dun sa number 4 naman, since mahaba yung travel time, mahihirapang mag-collect yung collection officer. Some of the items that require some explanation are numbers 2 and 5. In number 2, there should be regular public transport. Even if the lender has available motorized vehicles, it is essential that there be a regular transport system for two reasons. First, in case lender's vehicles are not available, the collector could still go to the field. And second, if a credit customer resides in an area where there is no regular public transport, his continued employability might be endangered. In number 5, road conditions should also be considered. If the roads are rough, three things will definitely happen. First, the collectors will not be motivated to collect in places where roads are difficult. Second, there will be an early onset of fatigue and loss of energy that will adversely affect collection performance even for the other accounts in well-paved roads. And third, collectors' vehicles will be prone to breakdowns, which will affect overall collection efficiency. Next, single proprietorship versus corporation or sole proprietorship versus corporation. Ang issue dito ay yung liability. A single proprietorship has unlimited liability. This means that if an entrepreneur uses a single proprietorship as the type of legal organization for his business and he incurs a liability in excess of his business resources, he is still liable to the extent of all his personal assets, present and future. Let's say ang liability ng sole proprietorship ay 60,000 pesos at ang assets ay 40,000 pesos. So kulang yung 40,000 pesos na assets para pambayad dun sa 60,000 liabilities ng sole proprietorship. Since kulang yung 40,000 pesos assets na pambayad dun sa 60,000 pesos liabilities, yung creditors, pwede nilang habulin yung owner ng sole proprietorship up to his personal assets. The creditors can go after the furniture of the owner, the car of the owner. Kung meron siyang farm, pwede rin, jewelry, house and lot, and others. Basta personal assets ng owner. A corporation, by contrast, has limited liability. For example, if a corporation becomes insolvent or bankrupt, and after selling all assets to pay off all liabilities, there is still an unpaid debt of 100,000 pesos, the stockholders are not liable for it. The corporation's liability is limited to the extent of its listed resources or assets. Meaning to say, the creditors cannot go after the personal assets of the stockholders to pay off the unpaid debt of 100,000 pesos. As you can see, this is the opposite of sole proprietorship or single proprietorship. Kasi sa single proprietorship or sole proprietorship, pwedeng habulin ng creditors yung personal assets ng owner. Even the top-level executives who signed the promissory notes cannot be held personally liable, provided that they signed them with authorization from the board of directors. They were clearly merely acting in behalf of the corporation and not for their own account. Philippine lenders, to avoid this problem, require the top officers of the corporation to sign twice. For example, si Real Reyes ang president ng corporation at si Lorna Venturanza ang treasurer ng corporation. They will sign twice for the corporation and for themselves. With this technique, the corporation is bound to pay the debt. And at the same time, Mr. Real Reyes and Miss Lorna Venturanza are also principally liable in their own personal capacity for the debt, having signed the promissory notes for themselves. Their personal assets, such as homes, cars, and jewelry, could be subjected to court action for recovery of an unpaid debt. Next, other side agreements imposed by lender. One condition imposed by lenders is compensating balance. Ano ba itong compensating balance? Ito ay maintaining balance. Some banks require that their borrowers should maintain a balance in their bank equivalent to 10% of the loan. Take note that the compensating balance differs from one bank to another. Iba't iba sila ng percentage. Since this compensating balance is required to be maintained, this should not be withdrawn or reduced. Hindi dapat siya wini-withdraw at hindi rin dapat siya binabawasan. Next, another condition imposed by lenders is annual cleanups. In some types of loans, banks require their borrowers to pay all unpaid loans at least once a year. Actually, ang purpose ng annual cleanups ay para matest yung capacity ng borrower, yung financial capacity ng borrower. Next, another condition imposed by lenders is submission of regular periodic financial statements. Financial statements provide the financial position and financial performance of an entity. So dito malalaman ng lenders kung ilan ba yung assets ng business, ilan ba yung liabilities, ilan ba yung capital, ilan ba yung income, at ilan ba yung expenses. So, pinapasubmit nila yung regular periodic financial statements ng borrowers para malaman nila kung meron bang financial capacity to pay yung borrowers. Another condition imposed by lenders is exclusive marketing agreement. Merchandise credit is granted provided that the buyer will sell and carry in its inventory on an exclusive basis only the products of the creditor supplier. This is very popular sa mga soft drinks company. Let's say Coca-Cola Company and Pepsi Company. So, for example, magbibigay lang ng merchandise credit si Pepsi Company sa isang business kapag ang ititinda niya ay Pepsi products lang. Hindi dapat magbenta yung borrower ng Coca-Cola products. That is the meaning of exclusive marketing agreement. Next, separation of credit from marketing operations. Ang ibig sabihin nito, separate yung function ng marketing department at function ng credit department. Ano ba kasi yung function ng marketing department? Ang function ng marketing department is magbenta. The marketing department's overriding concern is to sell. Ano naman yung function ng credit department? It is the credit department's sole responsibility to make sure that credit resources are used properly. Aside from that, the credit department must also assure that no credit sale should be allowed to unworthy customers.